Dubai threatened America. America responded within hours, and the shocking part is not the outcome, but what was used to make it happen. Because Dubai has no missiles, no sanctions, no decades-long history as a world power. And yet, a single statement made to the right person at the right moment was enough to make one of the world's greatest powers back down. Anyone who doesn't understand how this game works is making decisions today about where they live, where they keep their money, and what their future looks like, based on a map of the world that no longer reflects reality. While those who do understand are quietly and systematically moving into exactly the structure that will make the difference in the coming years between those who let the system work for them and those who only understand it when it's too late. Welcome, my name is Eugene Zimbelman from Dubai Finance. I help investors successfully invest in real estate in Dubai by finding the right property as an investor, Dubai Land Department certified property valuer and mortgage specialists. So, since February 28, 2026, the US and Israel have been at a war with Iran. I have already spoken about this in detail, and that's not what this episode is about. But what many people don't know is that this war is hitting the United Arab Emirates with full force right now. The UAE's oil production collapsed by 35% in March because Iran blocked the Strait of Hormuz. Stock markets in Dubai and Abu Dhabi have lost $120 billion in market value since the war began. Thousands of flights were temporarily cancelled, and UAE and the country's cash flow came under serious pressure. The real estate market? More on that later. And that is exactly at this moment the UAE makes a move that I want to explain you in detail today. From April 13 to 18, 2026, the World Bank Spring Meeting took place in Washington, the most important financial summit in the world. Central bank governors, finance ministers, and monetary representatives from over 190 countries sat in one room. Khaled Mohammed Balama, the governor of the UAE Central Bank, was there. And he held bilateral talks with US Treasury Secretary Scott Bessent and representatives of the Federal Reserve. No public statement, no press conference, a discreet conversation at the highest level. And he said in essence the following: if US dollar access for the UAE remains restricted, in other words, if America does not support us, the UAE could be forced to switch oil transactions to the Chinese yuan. That sounds technical, but it is not. That is a direct threat against the very foundation of American currency dominance. Since the 1970s, global US dollar dominance has worked through a single system. The oil is traded in US dollar. This is called the petrodollar system. When an OPEC member starts settling oil in yuan, that is an earthquake for American monetary policy. Washington knows exactly this, and Washington responded. On April 22nd, within hours of the Wall Street Journal report, Trump said live on CNBC, "It is under consideration. It's being a good country. It's being a good ally of ours." Treasury Secretary Bessent added, several Gulf states had requested currency swaps, and the US would look into it. America was at the table. Before we continue, a quick explanation, because this is the key to understand what is really going on here. A currency swap is an exchange agreement between two central banks. Central Bank A gives Central Bank B a certain amount of its currency and receives the same amount in the other currency in return. After an agreed period, the swap is reversed at the same exchange rate. No risk of loss, no credit in the traditional sense. So, in this specific case, it wouldn't work like this. The Federal Reserve lends US dollars to the UAE Central Bank and receives dirhams as security in return. After, for example, 90 days, the UAE returns the US dollars and the Fed returns the dirhams. But that is not really what this is about. Countries like UK, Japan, the Eurozone and Switzerland have permanent swap lines with the Fed. That is not a technical instrument. It is a sign of deep-rooted belonging. You are part of the inner circle of the global financial architecture. That is what the UAE wants, not the money, the status. Now to the second point, which is critical to understand this situation. The UAE dirham has been pegged to the US dollar since 1997. 3.67 dirhams per US dollar, fixed and unchanging. This is called a peg. It means the UAE central bank must always hold enough US dollars to theoretically redeem every dirham in circulation. It is therefore fundamentally dependent on the continuous flow of US dollars. So normally, this US dollar flows comes from two sources: oil exports settled in US dollars and international trade and capital inflows, which also run mainly in US dollars. Both of these have been massively disrupted by the war. The Hormuz blockade cut oil exports in half. The airport was closed, the port restricted, and capital flowed out. If this US dollar flow stays disrupted for months and reserves shrink, the peg comes under pressure. And a collapsing peg would be severe for Dubai as a global financial center, because the entire real estate economy, all international contracts and the trust of foreign investors are built on this exactly exchange rate stability. And if you want to learn more about the dirham's peg to the US dollar and what the impact of a depegging would look like, similar to what happened years ago with the Swiss franc and the euro, feel free to write in the comments. I will be happy to make a dedicated episode especially on that. But there's also a second political dimension. The US can, in extreme cases, restrict a country's access to the dollar clearing system. That is a nuclear instrument of US foreign policy, used against Iran, Russia and North Korea. By raising this point, the UAE also quietly reminded Washington, we know you have this instrument, but you also know what happens if you use it against a close ally that holds 2 trillion US dollars in sovereign assets and has committed 1 trillion US dollars in investments to America. And now comes the part that almost everyone missed. After Trump confirmed that a currency swap was being considered, the UAE immediately made one thing clear. We don't actually need it. Ambassador Al-Obtaiba, via official statement, any suggestion that the UAE requires external financial backing misreads the facts. And then he named the numbers. Over 2 trillion US dollars in sovereign investment assets. Over 300 billion US dollars in central bank currency reserves. Around 1.5 trillion US dollars in deposits within its own banking system. The UAE did not ask for help. The UAE played a negotiation position and then immediately made clear that it had held that negotiation from a position of strength. That is the difference. A cry for help would have weakened Dubai. This approach strengthened it. Washington had responded. That was all that was needed. There are several reasons why this worked. The US has been protecting its global dominance through the petrodollar for 50 years. Any suggestion that the Gulf state might settle oil in yuan is a serious threat for Washington. The UAE calculated and used this known reflex of America, not as a bluff, but as a negotiable option with real substance behind it. On top of that, the IMF spring meeting from April 13 to 18 in Washington is the highest financial summit in the world. Central Bank Governor Balmer did not put pressure on Bessent publicly. He did it discreetly, bilaterally, at the highest level. no escalation, just a clear piece of information with a clear meaning. That is precise diplomacy, not a threat. And the Yuan threat was only credible because the UAE has the means to follow through on it. $2 trillion in sovereign assets means the UAE is not depending on anyone. It has real alternatives. That is the difference between an empty threat and a strategic signal. I have been saying for months, Dubai wins in every scenario. Not because there are no problems here, but because the leadership of this country knows how the game is played. What does this mean in practice for you as a real estate investor? A country that forces America to act within hours is systematically important. That means unspoken protection. Washington simply cannot afford an uncontrolled collapse of this location. The IMF is already projecting 5.3% growth for the UAE for 2027. What you should take away from this episode is actually very simple. While decisions are being made at a global level about currencies, capital flows, and power structures, most investors only react to headlines. And that is exactly where the biggest opportunities in the Dubai real estate market are created. Because when capital repositions itself and individual market participants become uncertain, exactly this situation arises where you can buy below market value properties, provided you understand what is really happening in the background. And that is exactly the difference. Are you making your decisions based on news or based on data and real transactions? If you want to understand where the real opportunities in the Dubai real estate markets are right now and how you can take advantage of them, let's talk. Go now to www.dubai-finance.com now and book a free first consultation. I look forward to speaking with you soon.